Emmanuel, let's talk about the bond market first. We're seeing the bond yield trending between 11% and 12% on the yield curve. Now, what events do you see driving the market this year, Emmanuel?
Thank you, Uche, for having me on the show, and Happy New Year. Market has been bullish all through the close of last year, and that's owing to a number of factors. We have very strong offshore interest in the market, and that has continued this year. And going into the new year, there is an anticipation of a likely ease in monetary policy stance. We expect the regulatory authorities to ease their monetary policy stance and ease it into more of an expansionary monetary policy stance. So market may see a reduction in MPR. And owing to base effects, also looking at inflation, we may see an ease in inflation, even starting from December inflation announcement by the MBS, which market is expecting any time from now.
Right, and I mean, we did have the DMO coming out with a Q1 auction calendar that we'd been waiting for, Emmanuel, and I'd love to get your take on it. I mean, a lot of traders say it's quite interesting. We saw the reintroduction of some new tenors in that calendar. What is your take, and of course, what impact do you think it could possibly have on the market?
Okay, going by the auction calendar, market has been anticipating the calendar. It's usually a culture to get the DMO to release auction calendar to herald the way and sentiments on how market is going to fare. The calendar didn't come with much surprise, owing to the fact that we have some already existing issues that should be reopened to allow for more liquidity inflow, owing to the registration of Nigeria into Barclays Emerging Market Index and JP Morgan Index. JP Morgan has been listed already. We are going to see Barclays come upstream in March. The auction calendar, well, there was a 20-year or 17-year plus now tenor to maturity listing that would come up in February. Market has been expecting that that very issue would be reopened, owing to the liquidity squeeze in that very bond. But it's okay. It's okay. It's a good beginning. We'll see how yields will come out.
Right, and I mean, Emmanuel, we do know that on February 1st, we're gonna see the launch of retail bonds on the Nigerian Stock Exchange, and of course, we heard the NSC coming out with an unveiling 6 new fixed income market makers. I'd love to know what your take is on this, and of course, the impact you think it's gonna have on the overall bond markets in Nigeria.
Yes, like we used to say, the plentier the merrier. They are welcome to the folk. We've been expecting them to join us. The major effect we are going to see from this is that we are going to see some retail end of the bond market because of present challenges in trading volume of 100 million or 50 million in the bond market. We have little individual players that cannot access such market because of the huge fund impact in it. Part of what we are going to see also is an outreach to the greater populace of Nigeria, whom could now afford to participate in the bond market in trickles. We are going to see better capacity development from their own side, because it's not a market for an all person. We are going to see a greater awareness. We're going to see greater competition even in auction issues.
Right, and Emmanuel, certainly it'll be interesting to watch the impact this is going to have on the corporate and state bond issuance as well here in Nigeria. But let's just shift our attention to the upcoming inflation numbers. Of course, today we're expecting that coming out today from the Nigeria Bureau of Statistics. We also have the MPC decision coming next week. What are your expectations? Suddenly, what do you think? What effect do you think the outcomes will have on the market when they do come out?
Well, market forecasts have it that inflation is likely going to ease for the December outlook. We are going to see an ease in the flood effect. Presently, inflation for November was put at 12.3. I think we are going to come down to upper 11 figures. Well, I can authoritatively tell you the market has priced this in already in its security pricing, and that's why you could still say that bond yield is still trading at lower 11, and market is still very comfortable at those levels. MPR, well, I'm not expecting any major surprises in MPR meeting. It will be surprising to see them ease their contractionary stance at this first meeting. I think they're going to look at the inflation figures more closely and see how it will span out. Our take is that we may see an ease in MPR come March, when the MPC will be meeting next. This would likely have a turnaround effect in fixed income pricing, because I can tell you that any slight ease in MPR will turn this market around. Where it will turn it to, we may be looking at between 10.5 levels in fixed income instruments.